Okay, so I just wanted to show you a couple simple things that you can do with the trade balance while the market is happening live so that you can gauge different trading opportunities. So remember, we always want to pay attention to where the high and the low of the trade balance is because at some point, either of those are going to want to be breached. And secondly, always remember to watch the fake. So for example, today's actually a holiday, but oftentimes, and today was a great example, even on short sessions where there's a holiday, there can still be some really good trades. And so today should have been, if you traded today, you should have done extremely well by doing just a couple simple things. So we set our low of the balance area within the first 30 minutes, and we set our high within the first hour. Okay, this is very statistical. Now, lighter volume today initially, and so this is very typical holiday movement. And so what we have is we have this initial push up here by, it looks like about 2 ticks. And so we want to be very cautious of getting in on breakouts because there's a high percentage where this is just going to be a move to fake us out. Okay, so be very cautious of that. So conversely, if you look down at the low, we have our first low that was set off a couple ticks, and then our exact low, and then we tested it a third time, and we had a really strong bounce from there. So the way that I like to look at support and resistance is that either one, support or resistance, can only be hit. So in other words, that price can only be hit so many times before it gets broken, before there's a strong break. So if we have a situation like this where we have 3 dominant bounces off of this price, what's the likelihood of it bouncing again that strong a fourth time? Well, it can happen, but it's extremely unlikely. And so if we're going to be traders and we're going to put on risk and we're going to use probability in our favor, the probability of a fourth bounce, and by the way, those of you that are paying attention to every word that I'm saying, there's no magic number. So it's not 4, it's not 5, it's not 6, it's not 3. So in other words, there's no magical number of how many bounces we're going to get before we actually break. What we have to do is put on a trade and accept the outcome. Okay, so this is a situation where you want to already have a breakout down in here. So let me show you one more thing you can do that can also give us a clue that, now obviously we don't know this is going to happen, this really massive 20-point push down, but at least an indication that if we head down here, it's probably going to break. And so what you can do is you can just go up to your drawing tool, which is up here to the left, and you can go down to Fibonacci retracement. What you want to do in this case, we want to go from the high to the low and extend it down here so you can see the lines. And so what these are going to do is these are going to provide us with some very likely areas of resistance on the way back up. So because we went from high to low, low to high, and then we sat up on this high, but we made it all the way back down to the previous low, we want to go from high to low so that we can see where the retracement, in other words, where price is going to come back and potentially test. So these are all potential prices. But the key levels here are going to be the 50% and the 61.8 to be exact. Okay, so we want to pay attention to those prices. You can see here the 50% had a nice drop and the 61.8 had a beautiful drop. And so these are, those of you looking for trades, we'll have to do a completely separate video on what trades can we make inside of the balance area. But I want to show you this here because we hit our 50% and our 61%. And so these are trades that we want to put on risk because these have high probability. Now, could it go all the way up here and just do this all day long? Yeah, of course it could. But we already know that we have a low here and here and here. And if we want to get in on a position, if you're not trading a breakdown from here, we want to be short from the 50% and or the 61.8%. these are very likely prices that are going to react, and obviously they do. And you can do this on any day. Okay, so if you didn't trade this, you should have traded the breakdown, and we had 26, 25 points of movement, and you could have easily got as much as that as you wanted to. This is a 1-minute chart, and so it happened fast. If you were waiting and it filled you, then the rest is history, because at this point you're securing profit. But just a couple little simple things you can do on a daily basis. You can do this every single day, and you can do this on every single market. So it doesn't matter what you put the trade balance on, it will work the same way. Now, I almost exclusively talk about the ES just because I like to just be consistent, and so that you're not confused with all sorts of different markets, but I really could talk about anything. This that you're looking at is the NQ. Now, the NQ, the same exact strategies apply. This played out a little bit different than the ES, but we can use the same exact tools to trade this as well. So we have 2 tests of a low here early on in the day, and then we have 2 tests of the high, and look where price tested on the way back down, which was the high of the first 30-minute segment. Okay, and as we come back down, it tested again what was once support. So this became support as price came down to test it. It broke, and now it's testing it as resistance. Same exact thing as we broke down. So we could have obviously traded a breakdown if you're not already short from here. And that's one thing that you want to pay attention to. So regardless of what support or resistance line that you're using, once that gets broken, you want to look at using it as the opposite. So we have support through here. Well, initially it was resistance because that was the high of the first 30-minute period. It broke resistance and became support twice. It broke support here and became resistance. And that was obviously the trade of the day. But you have another chance, as if you didn't take the breakdown or get short here, as we bounced up hard. Look what it's testing. It missed it by a couple ticks, but it's testing the low of the balance area. Okay, so we can also use the retracement tool for this. So because we've made it once through here, what we want to do is see where this is going to potentially have support. So we go from the low to the high. Let's extend it out here so we can see the lines cross. So as we're coming back down, we're using, at this point it's already used the 23% retracement. It broke through both of these, the 38 and the 50. It hit the 61.8, came back to the 50, hit the 76.4, and it's just constantly using these and back to the 2360 on its way down. A little bit different, but the same type of situation applies for the NQ as well. And again, you can use this on any market, futures, forex, stocks, doesn't really matter what you use it on. Just make sure that you have the appropriate time set. So in your indicator settings, you just want to make sure that you have this set up right. If you just leave it, it should automatically be set up. However, I did notice something like if you use this on Bitcoin, you actually have to change that. This had huge movement, so this looks really small, but same exact principles apply. We want to be long above it, short below it. So basically, and this is the last point I'll make because this video is ending up being a bit longer than I wanted to make it. But the above the balance area and below the balance area, we want to be in the direction of that push. So the way that floor traders use this is that once we have shown strength above or below the balance area, this is where that saying, the trend is your friend, comes from. We want to be making trades in that direction. Okay, so we want to be buying. So look for any excuse, a breakout, swing highs, whatever you are using to get into the market, that's what you want to use in that direction. Okay. If you use some of my other tools like the box, you want to be trading box trades in the long position, obviously. And if you're using prediction points, you're going to want to watch for the pullbacks to buy off of those price levels. Okay, so that's a wrap for today. Make sure you practice, especially those of you that are new. Anytime that you introduce a new tool to your trading arsenal, you want to make sure that you have a lot of repetition in. But the good thing about this tool is it's very simple. It's not very complicated, but this should give you some ideas on what you can do the next session. And again, the great thing about this particular tool is it's something that can be used every single day. So a lot of times traders will use tools that they don't necessarily apply every day. There has to be specific types of criteria in order for that tool to be ideal. This, however, is something that you can use every single day. So that's a wrap, and we will continue this in the next video.